All right, let's begin this Eurotrade session. Welcome everyone, my name is Marcus D. If you're here for the first time, I've been trading for 18 years and 12 years out of that I've been working for various prop firms. I specialize in some of the more alternative products that you don't see very well represented anywhere else apart from TopstepTV. So you will see me do analysis for things like copper, natural gas, maybe even RBOB, which is heavily connected to something like crude oil. And yeah, let's see what we have this morning. So yesterday I was looking at the reversal on natural gas late in the day from the exhausted ADR high for yesterday that also hit the value area from the previous day. And that seems to be continuing throughout Globex in a very quiet way, but still it's moved away from that. So one of the ideas is to see whether they're going to continue that move down today as well. But what do we have when it comes to the NYMEX value areas? So right now it's still sitting in the NYMEX value from yesterday. So I would like to see it go below 287 and then to continue moving lower towards that 280 area, and 280 is where we have some put supports happening from the 0 DTEs. So we're going to see whether we can get there. I also have some exhaustion points at that price as well. So 280 is actually ADR low. So I'm just going to mark that and change it to green. So this is a full 24-hour quantitative extreme. And then for London, it actually is still sitting just above that. So 2.810, let's say. So it's all very, very close. And one thing that I do like about the fact that the ADR is going to be exceeded if we ever get there is that we also have this swing low, right? So swing lows are always a good area to try and find some long positions. Now, how they do it, whether it's going to be some kind of a liquidity grab or whether they just touch the demand area slightly higher up, remains to be seen. But whenever you have these strong options levels in the zone that you're looking at, they usually tend to get touched. So just by looking at it, I would say that they want to go for a stop, run, and reverse situation, because these are intraday time frames, and liquidity sweeps are very, very common. And if you look at how we opened for the weekend, they swung it down and literally reacted from 280, so that's definitely a reactive area. So therefore, if we ever get there today, wouldn't be a bad choice to look for some longs in that particular space. All right, I've actually been messing around with the new Topstep API. So I've been just working on getting like the infrastructure together, because I use Python, and I think most of the people that I saw coding, they use JavaScript. So I'm not very good at Java, but but yeah, so I've just been doing my conversion code and stuff, and I've been really kind of going deep into the coding side of things again, which is pretty cool. But you do lose a lot of time. Like, you sit down and suddenly you're like, oh, it's been 8 hours. Oh, okay. But yeah, it's been fun. I'm just starting with, like I said, with the infrastructure to make sure that the market data is working, that the authentications are working properly, that I can pull the contracts that I want to look at. And then once that's all done, I'm going to work on creating value areas and quantitative extremes. But yeah, I've been enjoying going back to the coding side of things, which I haven't done in probably about 3-4 years now. But yeah, so we'll see how that works. But it's certainly interesting that I think Topstep is probably one of the only companies out there that allow you to do automated trading systems now. So I really want to go back to the mechanical trading systems. But yeah, for the beginning test sort of strategy that I want to just try the whole things, whether they're working or not. I'm just creating like a very simple Bollinger Band scalping thing that has some volume components in there, and then just looks at mean reversions in crude oil whenever a slightly bigger volume appears, because that's something that I know from my own models and just like observing the markets for 12 years, because I've been trading crude oil for about 12 years, coming up to 13. And obviously you have to have the order manager, risk manager as well. So that's all like this kind of piece of code to make sure you're not over trading and stuff, and to make sure that the OCO orders are working as well. So you can create your own OCO orders when you are coding things on the back end. And yeah, so it's what I've been working on. Take it as you will. Do we have any coders in here? Who else is messing around with automated trading systems? All right, so Oscar G says, I'm long in your stocks. This is strong, so I wonder whether DAX is following that. So look. I don't know whether I would call DAX strong, but let me have a look at Euro stocks as well. Let's see. Oh yeah, that looks a lot better. And of course, if we ever get Eurex, we are going to have Euro stocks on here. Yeah, so Euro stocks is moving. What happened there? Is this because of the whole Putin thing? Let's have a look at whether I missed any news overnight, because I haven't looked at anything yet properly. So we're going to do that together. So let's see. I mean, it could be the fact that they need to talk to the European leaders, because they're all like canceling their holidays and vacations to come back and talk. Now, yesterday something odd was happening. I was wondering whether they were like attacking the satellites or something, because I have Starlink here. I don't have like regular broadband, because we're out in the sticks, right? So we have Starlink, and while I was on with Joe for Lunchbox Trading, first of all, the YouTube stream in Europe went down. And then I kept getting kicked out of USA websites, including the broadcast thing that they use in Topstep. So I was like, what? So I put my tinfoil hat on, and I was like, is this somebody trying to hack the satellites? What is happening? Because it's never happened before. Like, I've obviously been with TopstepTV from pretty much from the start, from like the second week when we started this whole thing. And yeah, it literally never ever happened for 2.5 years. But for some reason, yesterday, whilst Trump was talking with Zelensky, I kept getting kicked out. So I was like, okay, what are your thoughts? Anybody else have their tinfoil hat on today? Or is it just me? I don't know. Oh, Robert says, yeah, I had the same problem in Slovakia. Live stream was not working on YT. Yeah, so I think they were like messing around with the satellites. It's like, why? But why? So what's your stocks doing on the daily? I wanna know. I wanna know if he really loves me. So to me, it's done. So here's the Euro stocks. Let's have a look at it. This is just a CFD. I don't think for some reason I can't pull up anything else. But yeah, this is Euro stocks daily chart. They're still not at the all-time high, but they knocked on the previous high and reversed from it. But then this wick here, this to me is still bullish. Maybe a bit of a range for now, but if they continue to keep pushing it, because if you look at it on the 30-minute chart, I mean, that's a very strong move, and it just keeps going. It's arriving into this previous area of supply, so I'll be interested to see what they want to do with it. Yeah. Good call, Oscar. Yeah. Where'd you get in? So hold on, you said that before. Yeah, you didn't say what price you've been in. So to me, Euro stocks, like I tried trading Euro stocks back in the day, and for some reason it was really slow. Now I was trying to trade it back in 2014 when even ES was only moving like 12 to 20 ticks for the entire 24 hours. So obviously that is not a good thing for me because I don't like bonds for the same reason. DAX is just doing the typical summer thing, and I know that you say that it's more volatile, but I actually prefer DAX. I like my sort of medium volatility products that are smooth, but they still give you a certain amount of tickage per day. Unless I have that, I just can't really wrap my head around it, and I start doing stupid things. So I'm very aware that that's one of my mental triggers. And you never fully get rid of your Muppety moments, you just minimize them or recognize them quicker so that they can't hurt you. But let me just pull up the natural gas bookmap here. So natural gas, that's what I'm looking at, like some shorts there potentially. Struggling around 290, which was the GEX1 area even yesterday. So the level 7 really changed much, I think is because we are still in that summer mode, and normally natural gas moves a lot, but we've been so kind of crawly, quiet, and that's normal in August, so I'm not expecting miracles. But right now, if I look at it, it's still sitting slightly below VWAP. This is the reactionary move that we have from yesterday. The skew on both the moving averages and overnight VWAP is not, like, it's not massively down. But I think it might be good enough if we get some sort of action going. Because right now it's just so slow. And, oh, by the way, at some point during this stream, my sofas will be arriving. I don't know why it always arrives at like the most inopportune time. But yeah, so I may have to mute myself because the dogs are going to go berserk. And my husband is going to put them in our master bedroom, so they won't be in here, but they still get very loud. So yeah, let's see whether we can get some volume at some point, maybe towards the end of the stream, and maybe we'll get a natural gas moving a little bit better. But that's the plan. That's the only thing I can see that's super obvious right now. Gold to me is still in this just holding pattern, and we've seen that gold tends to go very quiet for this part of the London session. It moves a lot in Asia, although did it move a lot last night? I mean, it moved, but it was very haphazard. So let's have a look at that. Let's have a look at full contract. So here's a 30-minute time frame. Here is Tokyo Open, standard wick at the open, and then they sort of fake it out. Then they go to the lower end of the range that they establish in the first 30 minutes, and then it sort of crawled up whilst maintaining the range from the first 30 minutes. But yeah, this is not that great. Usually it's smoother. I think the previous day, yeah, so this was the previous day. Here is Tokyo Open, so again, shake out to one side, then a reversal, but then it kicked off into a nice trend. We didn't have that overnight. Does that mean that maybe COMEX is going to be a little bit more lively, since Tokyo didn't give us much juice? Remains to be seen, right? Trading Baba says, so Baba is grandmother in Serbian. It's quite funny. Trading grandmother. But I'm sure that's just your name. It's just my brain doing weird things. D, at what time frame do you analyze the market, and at what time frame majorly you execute trades? So here's the thing. I am a huge proponent of multi-time frame analysis, so I don't really marry myself to any particular time frame. When I'm doing, especially when I'm doing my longer time frame analysis. So if you've ever watched me, you will know that at the beginning of the month, I will actually be looking at the monthly charts just to see exactly where we are in that like massive bird's eye view, to understand whether we have any super large time frame areas that I might want to be interested in. Now this one, it does have a little swing low on the monthly chart, but I would like to see it even lower than that. Sorry, I have something on my face. Great, probably dog hair with, with 8 dogs. So yeah, that would be how I would begin my analysis. Now, natural gas has a downward bias for most times of the year, apart from when we either have some kind of hurricanes or it's really cold weather. Sometimes when it's really hot weather, they can kind of kick up the demand for natural gas, but generally it just keeps kind of going down. And similarly to crude oil, I hate being long crude oil and natural gas unless it's like super late in the day and I'm doing my settlement fade trade, which normally doesn't come in until my 7 p.m. sometimes 6:30 p.m. my time, and that would be about 1 p.m. Central if you're over in the States. So yeah, this is the weekly chart. So this is how I would approach my multi-time frame analysis, just looking at swing extremes, right? So where do we come from, and then how did we arrive to this area? So to me, this area, the arrival is a little bit haphazard because we've had these. If I make this much bigger. So if you look at how nearly all these three weekly candles for the past 3 weeks, they've all had these like big wicks to the upside, right? And that's usually something that you see when we start to arrive into some swing extremes, because there will be some people who look at that and go, hey, this is a good area to to maybe go long, but then they kept failing, and natural gas kept making a new lower low and a new lower low, and now it's still doing the same thing. And this is actually the first time that I'm kind of seeing it not making a lower low just yet. But remember that crude oil inventories, natural gas inventories, they're usually released on a Thursday, whereas crude oil inventories are on a Wednesday. So until that comes through, I don't really want to be speculating too many longs in natural gas, primarily because of my experience as well. Anytime I try to go long as a swing and there's nothing going on in the Midwest, it just keeps going down and down. So, and it's not as sensitive to the Russia news as crude oil for some strange reason. Probably, I don't know whether there's other sources of natural gas. I can't quite remember whether Russia. I mean, I know that Russia exports crude oil a lot. They're like the second biggest world exporter. So naturally, crude oil is going to be very sensitive to any headline risk. Whereas natural gas is kind of one of those products that doesn't really care. So whatever news you have, they're like, meh, we're just going to do whatever we're doing. But yeah, so when it comes to my analysis, I don't marry to any kind of particular time frame. I just look at all of them in a systematic way, analyzing things the same way. So how far is the swing extreme, aka supply and demand? And are we getting to that point cleanly? How far away is the next opposing area? And you can see in this example on the daily chart, that we did not arrive cleanly at all. In fact, we smacked into this nearby unclean arrival. So this is a supply, but because it's not at a swing extreme, it doesn't mean that, oh yeah, this is definitely a short, but it is something that could put a wrench in the works for the longs that might be coming in. So it's never a good idea to go long straight into these nearest edges of supplies if you're going long. And now we're actually having trouble there already because it's an unclean arrival, it's a dirty arrival. So now we're actually seeing an attempt of a reversal. So this, if it works out, if we do go lower today, we will have printed the evening star formation. It's a version of a 3-bar reversal, but it has its own name. Why do they call it an evening star? Well, because you have this one candle that's typically a green candle, then you have a doji, and then you have a reversal black candle or red candle if you like the colors, and that is called the evening star. Now when you see that, that means that another supply has been created from a supply, and it's technically a continuation pattern. So the location of these supplies and demands, it's very important, and it can give you a good directional indicator for the day. Okay. Now, one thing to note is that today we're not finished, so we're looking at an unfinished candle. So really, until that's done for today, I now have to go down to the intraday time frame and look at intraday levels, for which I use the value area edges, I use my quantitative extremes, and I use the options chain prices with the largest open interests. That's how I orient myself in the day. But usually, like, I would like to repeat again that for many, many years, since 2012, I've really traded mostly the New York and COMEX and NYMEX sessions. It was only in the last sort of 6-7 years that I started trading DAX for the London session. And that's because I was working for a London-based firm. So they obviously wanted us to be in the office, and I was like, well, I can't trade the CME products in the morning because they just don't move confidently enough. So these shows were meant as me bringing the DAX and Eurostox and all of that European side of things. But due to, unforeseen circumstances, we still don't have DAX. So in a way, that was a good thing for me because it caused me to go looking for products that would be viable to be traded for these hours. And I found copper, but copper does not move much in the summer, right? It moves through sort of March, April, May. Then June slows down. Then you have July and August that are pretty atrocious. And then it kind of starts coming back second week of September. And then October and November tend to be smashing. And then it goes quiet again in December. So it's a very kind of seasonal thing that you have to keep your pulse on whenever you're looking at trading copper. And same thing goes for platinum. There are certain times of the year when there is huge demand for platinum. Typically around Christmas periods and stuff. And I'm sure it has other uses and stuff, but generally in and around Christmas period, gold and platinum are obviously very desirable because you have the presents and jewelry and all that. And this is also why gold tends to skip over a few months and roll straight into December, because that is where the delivery requirements for the users of the product, of the commodity, have most use for it. So why would they trade, August, July? So they just skip over. In case you were wondering why gold skips over from June and then they just go into December immediately. That's why. All right. So yeah, when it comes to my executions, again, I don't really marry any particular time frame. However, I will make my final decisions based on either the 15-minute or 30-minute time frame. But that's not the only thing I look at. I also have Bookmap on the other side at all times. So I do watch tape, which is a very visual representation of the dome and the order flow that you're seeing going through. However, market profile is also a form of order flow trading because they can show you, like the TPOs show you the real-time auction developments. So it's all kind of smushed together. And, it might seem like, oh my God, it's so complex. But, trading is not exactly, it's not a rocket science, I wouldn't say, but it's just the fact that you need to remember several things all at once in order to formulate a good trading idea in the moment. That's what makes it difficult. And then you have this whole connection to your money beliefs and your traumas from when you were a kid and how you perceive the world around you, and all of that just starts mixing up, and that's what makes it really, really difficult. But when it comes to it, it's like A plus B equals C. Like, you basically are going to get either up, down, or sideways movement. Like, there's no fourth option, right? So if you can come up with a plan that works on probabilities rather than your own emotions, that will improve your trading drastically, right? So this is why I like data. This is why I find comfort in data. I find comfort in numbers. And, over the last sort of 7 years or so, I did do a lot of like mechanical trading system side. And I like that more than me sitting here and clicking buttons because I can free up my time sort of to do other things. I don't necessarily have to be there. However, I still have to be the one to decide which algorithm I'm going to switch on depending on what I feel is the highest probability setup for the day. But when it comes to actual entries, I will use anything from 2 minutes, 5 minutes, 15 and 30 minutes, but it really depends on the type of a playbook I'm attempting. And then some of them, there's no pattern. It's just like a break of the initial balance. That's your entry, right? So it's a real-time event. So kind of like the orb, right? Orb, you have a defined 1 minute to 3 minutes or 5 minute of the exchange trading, and then you basically trade the break of that. I actually, if I am going to do orbs, which I don't, I'm not really a big fan of orbs. I don't like trading for the first hour or so of any exchange open. I always used to be like more of an end of day trader. So I do have some playbooks that do work early, but I wouldn't say that they are something that I can use every single day on every single product. Unlike some of my other setups like the post and white cut reversal, which is something that commodities do on most days. Like 77% of the time, you have crude oil, RBOB, or natural gas that will turn around literally nearly every single day. And that's looking at very, very large sample sizes. So, those are the kind of things that I do. So yeah, London to me, apart from the Frankfurt fake out, has always been a little bit tricky. And for DAX, normally I used to do one little trade, which is more really a scalp. I wouldn't be looking for a massive turnaround unless it's with the trend. But usually if it's like smashing through the Asia high, I would kind of scalp it on the short side. And then I would wait for ballpark this time of day before I find my second trade for the London session. And then depending on whatever happens to that second trade, that will be my London. So I very rarely trade more than 2 trades for the London session. So yeah, that's, hopefully that's a little bit more clear. Tushar wants to know, Russia and Ukraine are the first and fifth largest producers of wheat. How does that impact commodities? Honestly, I've never traded wheat, so I wouldn't know to tell you. Like, I know a lot, but I don't know everything. I don't know. Maybe Coach Hoop might know that more, because I know that he's a lot more into ags and, corn. Like, he knows about the harvests, he knows about the seasonality of those products, and he can tell you a lot better. So I'm not the person to ask anything about wheat and how Russia news impacts wheat products. But I mean, the CME products mainly, at least that's what I thought, look at the US crop. I could be wrong. Again, I don't think I've ever placed a single trade in wheat. So in that regard, I'm a complete noob, and I'm telling you to go to Coach Hoop. He's your man. He does his class. I think he does it. Is it Thursdays? Oh, I can never remember that. But yeah, so go into Coach Hoop's class in Discord and ask him how and if the wheat prices are affected by this whole Russia thing. Van is asking me, I want to ask what time frame of supply and demand is valid for you. 4 hours daily, weekly. I do not put too much stock in the same type of analysis for supply and demand on anything lower than 4 hours, because usually anything 1 hour and lower is subject to a liquidity sweep. So then if you analyze your supplies and demands the way everybody knows how to do, strength of the move away, where do we turn around, where's the conterminous line, where is their market shift point, where how long do we stay away from it, and then the intraday time frame does its thing, and they basically take out the London high or the London low, and you're like, but please stop right now. It's because there's not enough trading information in those low time frames, so therefore they are definitely game for taking out highs and lows. So therefore, the intraday time frame, I look at them as literally extreme high, extreme low, and then I use profile for any other developments. Do we have single prints around there? Are they getting chewed up, or are they holding? Are we failing the auction? Do we have a neutral day? Do we have a normal day, normal variation day? How are the quantitative extremes behaving? Are we inside value or outside value for that current day TPO profile? All of that kind of plays into the same logic of what is happening on the day. Where, how far away, and then highs and lows. So let's say you have very frequently, you have Asia lows, they get taken out by ES, and then they reverse it. But that usually happens sometime post and white card, or into the euro close. It's not necessarily something that will happen immediately. But if the Asia low is somewhere around there when the main session opens for the ES and equities markets, this goes for NQ as well. You can even look at the divergences. Like if, for example, ES takes out the low, but NQ doesn't, you now have a possibility for NQ catching up to whatever ES has done before, and then doing the same thing before it reverses. So it can kind of give you like the timings and a whole bunch of other little nifty things that you can use along the way. But you can't learn all of that at once. You have to start learning one thing at a time, observing it in the marketplace. And I know everybody wants to go from zero to hero, but there is a skill progression. There is a task list that you should focus on. So let's say you want to observe how the supply and demand is behaving on a low time frame in light of what I just said. So for the next week, you'll be marking off Asia high, Asia low, and London high, London low, and then seeing how many times the supply and demand on, let's say, a 5-minute chart will actually get taken out because of what I just said. So then you observe that for a week and you log all of that. You literally write down, this time of day I noticed that Asia low was taken out, the supply and demand extreme high or extreme low did not hold into intraday like it does on the daily chart. And then you just collate and aggregate all of that data, and eventually you get experience. So I wish we had some kind of a matrix thing you can just plug it into your brain and download, but we're not there yet. So yeah. Paul H, over which time period do you look for these yearly patterns? I've actually collated them from the beginning of me trading crude oil. So I was always good at journaling and writing things down, and like, what time of day did this happen? How did it look like? How far it went? What was the daily range at the time? So going back for my 77% of the days when something turns around, crude oil turns around for post-NY cut. How far? That's another thing, right? Just keep that in mind. But there's always some sort of a reaction post-NY cut. Sometimes it's amazing. Sometimes it just runs through the entirety of the London range to the opposite side. Other times, not so much. So, those are the things that I've seen. But it's 12 years. So 12 years for the sample size. That post-NY cut, 77% of all of that time, I've seen crude oil reverse after 3 p.m. my time, which is after 9 a.m. And it's a 90-minute time window when you're looking for that setup. So it's not just like, 3 p.m. immediately. Sometimes they take until the euro close to even start going back. But generally, the 90-minute window is what you're looking for. Can you break down the Dow at the moment? Yeah, we can look at the Dow. Sofas have arrived. I don't know whether you can hear faint barking from the master bedroom, but you shouldn't be able to. All right, so right now, Dow is going through a value acceptance. Still hanging around the all-time high. We made a new all-time high. I think all of this is bullish. So I actually have a little long option on NVIDIA for the earnings towards the end of this month. I think it's the 27th. But basically, they've already started moving it up. So I'm front running that, and I will see how we are when we get closer to it. Might even roll it at some point. Well, it depends on how the earnings do. But yeah. So we'll see what happens. But I'm in with what was it? 177.50. I think I picked up. So when we dipped to just sub 178. the other day. It was at 178, and then I decided to do just a little at the money option. It was like literally just like a couple of strikes below the current price. So it was pretty cheap to pick up. And we'll see. There's always a contraction of volatility before the earnings, so I am expecting that. And that's one of the reasons why you might want to consider maybe a couple of legs of options. But yeah, okay, let's have a look at Dow. So to me, this is all still very bullish. Just a little bit of a slowdown for the summer months. Otherwise, I'm still bullish on equities. I know that we are like at all-time highs, but having watched equities go into yet another high, all the way through that quantitative easing post-credit crunch, I'm very careful with short equities. So unless we have a semi-apocalypse and we're all getting like machete out and leather pauldrons, Mad Max style, I don't think we have any cause just yet to short equities. Like, so anytime I see a cause for a long, I will be more inclined to do something with it. But having said that, apart from DAX, occasional YM, I don't really like trading equities intraday too much. I can tell you what's going on right now. So we have the London value area from yesterday at 44,951. Let's change the color of that to something purple. This is London specific value. It is not New York Stock Exchange value, okay? So this is just for the London session. 45.030, 45.0, really 029, but I'm going to round it up to 030. Surprisingly, New York Stock Exchange value, I just changed it. It's not too different. So for example, this is the London value. This is the New York value. So just a little bit higher. And right now we are sort of traipsing through the London value area for value acceptance. How is the strength of this move? I would classify it as medium because we do have a single print upon the value acceptance. So that was a pretty big move that left single prints behind. You can even call them FVGs. It's all the same thing. It's basically a big move that leaves a gap from the previous candle to the current candle. Now on profile, you can actually see that pretty easily. So in this one, it kind of shows up as a gap on the graphics, but also this is the same information just with TPOs because I like to have both. It shows you that the C period still has a little bit of a single print left there. So really, for the continued move up, you want to see these single prints holding. If they, at some point of the day, start to eat it up, that's going to be quite bearish for me. But again, if it was me chasing any kind of a pullback, I would probably be out of that because the extension that we're seeing right now is pretty sizable, especially for the London session. So I wouldn't necessarily want to be going against that. If it makes yet another set of single prints, you then will have multiple sets. And let's say that we end up with another single print here. If we're further out, that becomes a possibility to actually come and grab it on a pullback. So it's a very systematic way of coming up with the actual trade locations for continuation trade. And that's why I like them. And then if they break down, that shows you an auction fade is starting. The auction fade is my concept. Because Dalton doesn't differentiate between like a failed auction and a sustained auction that then fades. So he never really to me, properly defined that. And I kept seeing that in my commodities. And maybe it's because the equities rarely do that, right? They just kind of go into an upside and then just hang there. Whereas commodities definitely go into these auction fades that sometime return all the way to the initial balance, which is this red, filled out red box here. So yeah, medium strength auction, so far value acceptance, until it gets to 45.030, I don't really see this stopping. So yeah. I'm just going to mute myself for a second because the dogs are being a bit loud. All right, so the sofas are in. Exciting. But the guys that brought in the sofa, the delivery guys, they wanted to meet the dogs. So my dogs always bark at people, but then they settle in and they start kissing you and jumping on you to cuddle and stuff. So yeah, they wanted to see the 8 little monsters that we have. And that's why the noise is happening. What's gold doing? Going sideways. That's what it's doing. Gold. Don't treat this. This is disgusting. Literally just going sideways. It might liven up after like 11 o'clock, but for me this is just meh. Who let the dogs out? Yeah, there you go. Bernard is going for it. I want to teach them to do that when I sing "Who Let the Dogs Out," and they go row, 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 row. That'd be pretty cool. Anyways, yeah. So to me, gold is just like snooze fest, man. Like yesterday, there was like a move. Between let's say 12 o'clock my time, so in about an hour and a half started moving, right? Pre-market into Comics Open, and then lo and behold, up to about Euro close, tried to do a squiggle, established a range, and then chopped around like crazy, and that was it. Like this is all you got. So if you were looking for some less crazy movement, really you were stuck in a range for 1, 2, 3, 4, 5, 6, like literally 6 hours. It went nowhere. So yeah, maybe pre-market and like sort of the first couple of hours might look better. To me, this looks like a total snooze fest, and I do not want any part in that. So I'm going to wait. But yeah, so I don't really see gold as a good option for London. I mean, it's one of those, like, is my internet on? You know, you look at it and it's just stuck on the same price, and you're like, keep looking at the connection to see whether it's actually, is this thing on? Is it on? So until that changes and until I see some little bit more bounciness in the price action, I don't want anything to do with gold. Platinum, yesterday I looked at it and it was also a snooze fest. Today it looks less snoozy, but this was the yesterday development. Like, meh, no. Range. But we bust through the range, then we go down, then we hold the range. And then we hold the range. Then we go into Asia, bust through the range, reverse, and then kick off into whatever is happening now. So maybe platinum could be a good choice, given the fact that London seems to have really gone into some sort of a move. But let's have a look at some levels, right? Because these levels are very old. Now, by the fact that I still have the average session range highs from the other day, and we're still not there, or we're literally in the same area from like a week ago, that tells me that on the daily charts we have a range. And lo and behold, that is exactly what we have. Let me see if natural gas is doing anything. Kind of. There was a little bit of a sweep on natural gas, but we've just smacked into an area where we have a few contracts available. That was also the recent low, so I'm going to wait still. But yeah, this is the daily chart of platinum. Literally, again, sideways action. Not much there. So purely on the basis of how the larger time frames look, I would like it to break away from this and to stop doing these inside bars. I don't like markets that are sideways. Even though I've gotten better at trading the ranges in the last sort of 7 or 8 years, they're still not my favorite. I ain't a range trader. I'm a reversion trader first and foremost. We'll go into a continuation trade every so often, but generally I like my mean reversions, right? And this ain't it for me. But let's have a look at some options levels. Just gonna have a look at silver as well, because silver, it's at the time of the year when it starts to go down seasonally. So maybe if we look at silver starting to dip down, I might be interested in that, but not in the moment. Let me switch that out to platinum. Still in October, another one of those products that jumped. And are we arriving to any areas of interest? So one thing that I'm not liking is that all of the GEX levels are very, very close together. Very close together. So we literally have every sort of 10, not even 10. This is, so 1345, then 1350. Yeah, every 5 prices we kind of get another GEX level. And they're very evenly distributed, which is telling me more about the lack of general interest. Now, the only distance between the open interest levels in the options is from 1343 all the way down to 1328. Now, if we manage to break through that to the downside, I wouldn't be opposed to running a break of GEX2 level ballpark around 1345, okay? So that's the only thing that I'm seeing here. Otherwise, to me, even though we went into a big move, I'm not that keen on that because of the GEX levels. It makes it very difficult to stay cool. Screen frozen? Really? I don't think the screen is frozen. Is it? Am I frozen? Am I frozen? Chat, tell me if the screen is okay, because Mariano is saying the screen is frozen. I'm not seeing that. Is it still frozen? No. Drop Straight says, neighbor has 3 pit bulls. They are liable to knock you down and lick you to death. Yeah. So with pit bulls, I find that it's really down to how the owners are training them. And I do feel like you have to be a pretty decisive strong alpha so that you don't take any sort of nonsense and bullshit from them, because they are strong dogs, right? I would never have pit bulls because I know that I physically would not be able to control them. Maybe when I was doing bodybuilding or something, but I have little dogs, even though Bernard is not that little. Bernard is like a small Labrador, even though he is the sibling of everybody else. But yeah. So platinum to me, purely because of what we have on the daily chart, is still a range trade. Let's put it that way. It's still a range trade. I would still maybe look at the very top of 1379, 1380 to get taken out because of the range, and then to maybe reverse yet again. That would be my alternative. Or if we break through that 1345, and then we have some room towards the next GEX level on the intraday time frame. Other than that, I don't find platinum particularly interesting at this time until it either reaches those 2 points. So I can mark them on the chart. So let's can I delete all of this? I know there's a delete all, but I forgot where it is. So Granny D is just going to do this manually. All right, so let's put one line up here. Let's put it in yellow. And then 1345, roughly. I want to see the price going through 1345 and then all the way through to 1928. That would be kind of the intraday move that I would be interested in. There we go. So that's the high. This is the nearest market shift area, conterminus line as I like to call it, but because it's in a range, I would want to see it run all the way through to the nearest swing low and then take that out, and that would be my take profit if I'm able to get in on that. But otherwise, I will not be getting involved away from these areas. So yeah. Right, let's have a look. John Killio wants to know what specific habits outside of the charts contributed most to your trading consistency. Honestly, I think it was my musician discipline, because I was a session musician. I've been playing instruments since I was 4. I was a multi-instrumentalist and a singer for a number of years, but mainly saxophone player. I have a degree in flute. Don't know why, because I played pop and rock since I was like 13, 14. But I suppose that was a thing to do back then. So I played electric guitar as well for many years. I suppose I still do, but my pads are totally gone now. I still have, like, if you... I didn't put my bob on. My lizard is not on. My lizard is not on. So my... guitar and my sax are actually in the back holding up Bob at the moment. That's there. So if you see that thing below, so the very bottom is actually a saxophone box, and then on top of that is my Ibanez box. So they are there. I just have not. I have not really played them for a long time. So. Yeah, I think the repetition, methodical approach, practice, drill, until you get better in very small increments. I think that's the biggest thing that has made a difference with me, because in trading you have to do the same thing. You have to identify the weakness, and in music that would be identifying the phrase that you're constantly fumbling. Break it down to be super slow, so go down to a very slow tempo. And then look at it slowly and how it all happens, right? So, like, specifically if you're doing something like tape reading, you can record your screen, and then you can maybe get into some kind of a video editing and slow it right down and then look at how those events were transpiring whilst you're also looking at a chart, so you have them side by side. And then once you're able to recognize the pattern in slow-mo, then start speeding it up in very slow increments. So that's something that I did for my price action reading and for reactions in real time, especially for like something like liquidity grabs and stop, run, and reverse, as we like to call it back in the day, because I'm very old school. Especially for those setups, because they, unless you strike at the right time, they're gone in the blink of an eye, and then you don't have a trade. So things like that. And some people are like, oh, you can do it through limit orders. Well, yes and no. I like to have better control upon entry. So 90% of my trades will be, for intraday, will be market orders. If I'm doing like, a swing trade or option, maybe I'll put in a limit order because I want to get the specific price. But even then, I like to have a bit more control. So yeah. So I think it was the fact that I was a musician. I was very disciplined. I was obsessed with it. And the same thing kind of carried over into trading, which is why I'm here 18 years later, right? Smart Trading says, hello D, I just passed 150k on last Friday. Very happy, but now my balance is 0 now. So if I make my balance more than 10, 15k, then how much could be with my drawdown? Still 4.5 grand on the whole balance. In the XFA, the end of day drawdown only runs to the original drawdown. So it means once you pass 4.5k, of profit, the trailing drawdown stops, and therefore from there on out, in the XFA stage, live is different, but in the XFA stage, you get to control your own risk and how much you will risk from there on out. So it's entire balance after 4.5k. So there's no more trailing. We don't trail forever. That's not the kind of company we are, okay? There's no trailing once you're at a funded level past the original max drawdown. So you make that. That's also known as the minimum balance, right? You will notice that the trading drawdown will stop. What I don't like about your statement is that you're already talking about making your balance 10, 15k and stuff. So focus on the process, because many people find that they don't do that well in the funded level because now there's no resets. So take it very conservatively to at least build up those first 4.5k. I actually don't really start scaling up until I get to about 10k. And scaling up for me means going from 5 micros to 1 mini, because that's how the scaling works for me in my head. And that's how I got to live, not by full porting it and immediately trading 5 accounts all at once. And no, I took one account, then I passed another one and another one. And then I had an excellent March, excellent April. And then in literally like, I don't know whether it was like 40 days, they put me back into live immediately. So was that good? I don't know, because I was expecting to build up a little bit more of a balance before I ended up back in the live, but apparently consistency, and you can get called up to live at any point regardless of your account balance. I've known people that have got called up with like 7.5 grand account balance. I got called up with like just under 20k. It really varies. And then some people, and it's I don't know what the whole thing is behind that, because it seems like the less consistent you are, the longer you stay in the XFA, and those types of people tend to rack up huge balances. So I don't really know what the criteria is, because I'm obviously not a part of the risk team. So maybe I can sit down with them to talk it through, because I'm a bit perplexed why some people who are clearly lacking consistency are not being transferred to live due to making sure that they don't go over a certain amount. and yet they're kind of allowed to make make big balances. And yeah, so we'll see. Yeah, we'll see. Drop Straight says, oh, there's a reset, all right. It's called start over and call back. But yeah, but then you have to start over. Sarah wants to know how the doggies in the new house. They are loving it. They're absolutely loving it. The doggies are loving the big garden. They're loving the big field that's secure down the road where they can run around and scream their heads off, chasing each other and chasing after a ball. We have a lovely new doggy school, so yeah, they love the big bed because we got a Super King bed, so everybody fits very nicely. And yeah. Greg says the key is inconsistency. Good to know. Honestly, I don't know because, like I said, I'm not a part of the risk team, but I've just seen some people who have stayed in the XFA stage for a very long time, and then they come into the XFA with like 75 or 100. They come into live with like 75k or 100, but then we show consistency and they immediately put you in. So you're starting with like peanuts, but still starting on the same 3k balance. So 3k data loss limit. It is more difficult on the live side because of that daily loss limit. And I remember back in the day, I struggled with that. And obviously the live and the 3K daily loss limit makes it, for me, it's purely talking from my perspective, for me makes it extremely difficult to size up because I feel like I'm starting a combine every day rather than managing the balance that you've already built up. So for me, it's a bit tricky. Take it as you will, but just being honest. Chad, you misunderstood, man. It's not that I need to be a strong alpha. I don't need an alpha. My dogs do. Do you want that job? Knock yourself out, man. Greg B is saying that you, your husband, and your 8 dogs all share one bed. Look, they've got their own beds, right? They've all got a bed each. And they've got one of those, Tony, my normal trading size is, on my other account that I've run for absolute years and years, it's a corporate account. And there we run like 40, 50 lots. But yeah. On prop accounts, I start on 5 micros, absolutely. And the highest that I would go in any prop accounts would be like maybe 3 minis, maybe. Because remember that prop accounts are not there to build, your portfolio or something. They're there for running income. And if you're not taking money out, I don't know what you're doing, It's like you're supposed to do running income through your prop accounts and then do other stuff on the side, like investing in long-term stocks or maybe doing some options trading, maybe buying a house as an asset that can grow. Prop accounts for me have always been just like just running income. But, we're all different. So, I don't know. To me, I don't see the point of leaving a lot of cash in the prop account. Let's have a look at more questions. I'm probably missed some. Yeah, Shakes says, if the Asian high-low is taken out before London, what would your next go-to confluence be? Post NY cut for the highest probability setup. So after 3 p.m., that's my next, I call them day trading time zones. So I have the day trading time zone, Frankie fake out from Eurex Open all the way up to 10 a.m. London. And then nothing until post NY cut, post 3 p.m. into the Euro close. Then for some products, I do have some New York lunchtime setups that you really need to be careful where you're going to trade those. But there are opportunities to maybe swipe a range trade if the initial balance is sizable enough on the day. But, that's all down to context and what you're trading. So it won't be applicable for everything. And then again, after that period is over, I have the fade into settlement on certain days. That doesn't occur 77% of the time. I would say it's more like 50-50. But it's still been the trades that sometimes brings my day back to either scratch or into some profit if the rest of the day didn't go well. So for me, very, very important to stay in the game with enough bullets in my DLL to try and get to the end of the day for that last trade. So this is how I stay on the low amount of trades per day. So I don't trade all day, every day. I trade 2 hours in the morning, then a big break, then another 2 hours in the afternoon, and then another 90 minutes towards the end of the day. So, yeah. Shay Hughes says, Dee, could you tell us if there are early signs that indicate you're entering a range environment? The range environment, usually let's say you have a sustained auction. So let's run an example. Let's try and do gold maybe from yesterday on a 30-minute time frame. Okay. Is to do with whether it's making a lower low or not. So here is ballpark, slight sustained auction, down. The first sign that a range could be coming in is when the sustained auction does not make a new lower low. It's a sign of a slowdown, right? So if I maybe do, where are the emojis? Well, the emojis. So here they are. So if they stop creating lower lows, maybe we can put a palm tree. So creates a lower low, and then this candle here doesn't, right? This candle here starts to have a bit of a vacay in the same area, and then the next one tries to go down, but then this is a form of a stop run and reverse, because they tried to go below, promptly reversed it and ended up in range. So lack of a lower low as a continuation of whatever was started before is a very good early indicator that the price action is slowing down. And then you effectively can flip and just go, well, what's the range here? And then you take the range of those previous two candles, and then you go, let's see if we can stay inside this or not. And because this was now into the euro close, for me this would have been scalps to the long side until proven otherwise. Scalps to the long side. It was such a quiet snooze fest day though that would have yielded maybe 20 ticks, it would have been great. And how I play the ranges, I don't play them for full rotation. I play them from the liquidity grab to the middle of that range. And then liquidity grab to the middle of the range. Liquidity grab, middle of the range. And you can, like if you're hell-bent on staring at the charts all day, you can grab like 20, 30 ticks like that a few times. And when I was a super active trader, when I worked in prop firms and I was healthy and I could get my brain to work for more than like 4 hours a day, I did that. I did that. It was always labor intensive though. Always labor intensive because you had to be very careful with your targets and then try to swipe it 2 or 3 times in the space of like an hour or so and then do the same thing until the range breaks. But I just personally, I think it's too labor intensive and I don't like doing that. But yeah, the very first sign of a range getting established is when something fails to make an advancement. You should already go, hold up a minute. Especially in this case, like if you look at the composition of this particular candle that established the range, it actually tried to go higher in the first instance. It opened up here. So at one point it would have looked like a bullish engulfing. So if you were front running the reversal, you would have gone, oh, this is reversing. But then it failed. However, it failed to make a lower low. So it just established itself in like this like ping zone, almost like it ran into a wall. It's like, whoop, sorry. And then it just, and then it stayed range bound. And that range continued. So yeah, this one failed to try to go lower. It's like, are we going further? We're not. What are we doing? Chilling on the beach. So we're not going anywhere now. Maybe from the beach to the bar, 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 several times. And there's another one. From the beach to the bar. So vacay time, right? Yay. Let's get margaritas. All right, so we've got about 10 minutes left. YMGCMBT says, I blew up another 50K account test yesterday morning on the micro Nasdaq in the first hour of the opening bell. Way too zoomed in, way too over leveraged. Okay, so why don't you wait that first hour out? Like, we're talking about M&Q that moves most of the day. Granted, yesterday was a horrible day. It was a snooze fest. It's August, so everything was a snooze fest. So I'm not surprised, but why not take the conservative stance during these quieter times until things pick up to not trade the first hour? So why don't we do that? I'm going to make that for a task for you, specifically for the next day, for the next week, even until the end of this week. Don't trade for the first hour. Look for opportunities after. You can use the ranges, like let's say you were looking at an orb. You can use that range even later on, especially if it's like a range-bound day. You can use the orb to establish an orientation of where we are on the day, maybe even just directionally, after the first hour. It doesn't have to be in the first hour. For me, the day trading time zone for equities is also towards sort of after 3 p.m. So at least first half hour, don't do anything. But very frequently I like to do DAX reversals into the euro close. They are pretty tasty, and I know that NQ and ES do the same thing. I like to express my my direction through DAX, but it's also an equity index. So the same sort of things play out. Greg B says, bunch of drunks on your beach. Yeah, that's usually how it goes, isn't it? What else do you do on a vacay? Drops trades, LCC. I usually won't trade a range unless there's a 15-tick range or larger. Yeah, that's a good way to approach it. See, that's a systematic condition. Until there's a 15-tick range, you will not take a trade. I like that. Greg B says, will you give us a class on your trading times in BRP? Do you know what? That's somewhat a bit of a proprietary thing. And I can give you pointers, but it's not just the time of day. It's the type of setups that you're looking for. So I will, I have a lesson where I will teach you how the typical trading day looks like based on the events that are perceived across a wide number of assets. Because remember, I'm also a commodities trader. So a lot of the findings that I have for some of the, let's say, settlement fade on crude oil, that's like a crude oil specific thing. It's not going to happen at the same time of day, and it's probably not going to happen in equities at all, especially if you're on a zombie rally. So that doesn't apply. So, I have to be very careful how I deliver certain information, because I know that most of you are just absolutely obsessed with NQ and you want equity specific time zones. So I have to modify some of my my usual lectures to account for that. But yes, I will take you to the typical trading day and the time zones that I look at personally. Then it's down to you to, so I can't give you all of my playbooks because we're not the same. And unless you're actually coming to me to learn the actual Market Stalkers method, I'm not able to give you like all of it in the same context. And I'm certainly not going to be giving you the flow diagrams from my method because, you know, that would be just, again, a small chunk of the story. So, you know, and I would have to sit there for 18 months to take you through the entirety of what I teach. We don't have that much time. So in 3 months, I have to really pick what topics will be the most beneficial for everybody in question, including some of the newer traders, because over 54% of people in our group this season have been trading 1 year or less, and even 6 months or less. And then there's the other remainder of people trading between sort of 3 and 5 years, and then a few of you that have been trading for over 5 years, all the way up to like 20 years. So again, that means as a coach, I need to be careful with what sort of information will be the most useful for everybody in question. Therefore, me talking about, you know, options open interest and Greeks and implied volatility and all of that, that's not going to be very useful, even though I do use those levels. But I feel that that would go over the heads of a lot of people. So, you know. So yeah, I do have a curriculum that I ran last season. I've flipped around the lectures this time around because I think some of them were more beneficial just looking at how the progression of traders was happening. So I flipped them, the order of them. And for the most part, I think that the profile opens, like the whole TPO profile, the intraday profile, it wasn't like, I don't think many people resonated with that. But I think a lot of people resonated with the open sentiment in relation to previous day's value. So that's definitely going to be one of the lectures. I will talk about quantitative extremes. So I will give you that as a tool to look at. You may need some spreadsheets. You may need a spreadsheet. But yeah. Captain Knuckles said, how many accounts did you blow up when you started out on Topstep? Honestly, back in 2015, I think just one, and then the second one I got funded on. There was no XFAs back then, and you took the minimum 10 days to pass a combine, and then you had to go into a live preparation, funded preparation, where you were still in sim and still couldn't take out payouts, and you had a weekly loss limit as the daily loss limit of the combine size that you chose. So therefore, in order to get funded, you would spend 2 months getting there. So to blow up an account that you've just worked to get for 2 months, that would have been ultra stupid. And I feel that the industry would have been better off if we didn't go for the whole faster, quicker, rush into an XFA, pay everybody, there, do this. I actually have a bit of a problem because I think it, and I understand that Topstep had to go with the industry. We couldn't just stay doing like 2 months, 1 month for the combine, another month for the 3K weekly loss limit. Different ball game altogether, guys. You couldn't just blow up an account willy-nilly and just go into another one. Also, there was no XFA stage. Everybody who passed a funded account went into live. Also, no micros. Put that in your pipe and smoke it. So, yeah, no micros, no XFA, no sim period. It was literally a combined 10 days minimum days before you could even get funded. Then the live prep on weekly loss limit being what your daily loss limit was. So you need to trade so that you don't blow up 3K in a week. And after that, they would open up the purse strings and put money into a live account. See how different it was. Very different. And nowadays it's like, blew up a 50K account, and just get another one. Why? Because you have this thing in the back of your mind going, I can pass in 2 days, I can get back in 2 days. And don't get me wrong, it's like, it's great for those of us who know what we're doing, but this is atrocious for noobs, like for novice traders. This is not a good thing, right? And like I said, I understand why we had to go down that route, because now not only did we have other companies like pass in 1 day, now we have straight to funded stage. It's like, who needs to practice, right? Let's just pay arm and a leg for one account. And again, this is good for good traders, but it's not good for newbies. It's like there's a skill progression level. And if it was me, I would actually have somebody running. You know how when you sign up for certain brokerages and you want to open up a certain type of an account, they actually take you through a test of like your knowledge of the markets. I think we would need that for straight to funded accounts. That's just my opinion. So yeah. Osterici, I've been trading in prop since 2012, and I came to Topstep in 2015. Before micros. Yeah. Stephen Donlan says, what area are you from in the UK? So I'm actually a naturalized British citizen. So I was born and raised in Serbia, in Belgrade, the capital. But then I moved to the UK in early 2000s. And I lived in Battersea. So first I lived in North London because I went to university there. I was studying, that was like going to be the second degree, and I was studying commercial music production. And then I moved to Battersea in 2005, and I stayed in Battersea for a very, very long time, so Wandsworth, effectively. And now I'm in Surrey. So I'm not going to say exactly where. I don't want to, dox myself or anything. But yeah, I'm in Surrey. I'm sort of the border of West Sussex and Surrey. Let's put it that way. But yeah, it's a bit posh. Yeah. Osterici also says, D, what does, and I'm probably butchering your name, I'm so sorry. D, what does Topstep consider as consistent? I don't know, man. I'm not a part of the risk team. Like I said, I think that they look at a variety of metrics before they decide whether you're, it's not just going to be 5 payouts. From what I understand, 5 payouts triggers the monitoring of the risk team to see whether you're eligible. And then they look at your trading closely, right? So 5 payouts is not like do or die, you're going to automatically. It's not quite the case for everybody. If you're wildly inconsistent, they are not going to get you into any account. They'll be like, what are you doing? But if you are super consistent and you haven't even had a single payout, they might go, okay, you're controlling your downside. Some of the things that I would be looking at if I was the risk manager. How are you controlling your downside? And I would actually like to see some losing days. From a risk perspective, if you have somebody who's just smashing it, you don't know how they behave on a losing day. So I don't want to see all green days personally. I don't care much about the streaks. They're good once you're funded, but and good for your pocket, right? But from a risk perspective, I want to see how this trader will behave when things are not going to plan, okay? Because everybody has a red day every so often. So do they have, 200, 250, 300, 400, 200, 200, and then 4.5 grand loser? Or do we have 200 to 300 loss, 400 loss? Something that is less than the streak that you can generate. That would be one of my metrics. Or whether the losing days are overall just smaller than your winning days. And there's a number of things you can do to calculate that. But yeah, to me, having a green streak on a trader that I've never seen before and I know nothing about, I would be very skeptical to give them a live without seeing how they behave on a red day. Those are some of my thoughts. Greg B says, whatever you teach is incredibly well appreciated. So glad to be in the VIP. Hey, it's glad to have you on. Greg, I mean, if you're open, do you want to like come on lunchbox trading with me someday? You can ask me all these questions one-on-one. And he says, well, you were the coach I wanted most. Thank you. I'm very humbled by that. I like the fact that people are resonating with what I teach, and I love sharing my experience. I gave up on the idea, not Eve. Okay, yeah, Sarah, you're in Surrey too. Okay, well, I mean, why don't you reach out to me? Maybe we can go for a coffee. I know that you've got like dogs and stuff as well. But yeah, I'd love to meet you. Eric Clapton is from Ripley, Surrey, England. Yeah, I know. We have a few celebrities in and around this area, so yeah. Oh, you're in Chelsea, World's End. Yeah, so just across the river. I used to live, so my other house was just off Latchmere Road. So when you go through Battersea Bridge Road and then you just keep going, that extends into Latchmere Road. And then we had one of the cottages in the Shaftesbury estate for many, many years. Yeah. Yes, Sarah, please do. Please do. Okay. Oh my God, we're at time. I did not notice. This is what happens when you're having fun, guys. Markets are not moving much, but we're having fun chatting, right? Okay, so I am actually going to be on with another one of our VIPs on Lunchbox Trading. I just saw that on the schedule, and yes, so you will see me a little bit later. And also this week, I'm gonna be on Fast Markets. So you're gonna get 3 hours of me having banter with the rest of the team. Looking forward to that. It's going to be the Londoners takeover. It's going to be me and Aaron on Fast Markets. I haven't really shared the stage with Aaron yet. I don't think we've been on yet, so that would be cool. We talked a little bit on Slack in the back end, but not much. So it will be very, very nice to actually meet Aaron properly and to do some analysis together. So yeah. So Bruno is actually saying to me that if you have less than 5K overall balance after 5 payouts, it's unlikely that you will be moved at that time. That's a very good point. Thanks, Bruno. So yeah. All right, let me just have a look at the questions. I think that's pretty much it for now. So I'm going to finish the stream here. Again, I really appreciate everybody spending some time with me. No trades. I couldn't really see anything. That natural gas trade that I was looking at, it was just kind of crawling down. I'm not... It would be too much risk for me, because look at this. So just to explain why I'm not in... I was already looking at it in and around this area. So if I was going to go into that, I would have had to use a very, very large stop. Very large stop. Certainly to go over GEX1. So I would like to see this crawl back closer to GEX1 so that I can be closer to the area that I want to be getting involved with, rather than being miles away and then experiencing a huge drawdown. So for me, the amount of risk required at the time on this idea was too much. We're going to see if that changes as we get closer to NYMEX. But as always, I'm going to be looking for setups later on. So I'm going to do some coding before then. So we are going to see what we have. Maybe by lunchbox trading, I might be able to find a trade. So I'm not going to be over trading today. I'm not going to be like sitting there looking for active trades all day long, because it is August. And typically if I wasn't doing these streams, I wouldn't even be trading. So I'm going to focus my all of my efforts on getting these API connections ready and less buggy so that I can start testing and building some models. Anyways, thank you so much for being here. This was the Euro Trade. I'm Marcus Stoker D. I will see you later for Lunchbox Trading. Take care.